Welcome to Wise Beyond Bitcoin, where you come for the macro outlook and blockchain opportunities. My name is Lucas.
And my name's Ryan.
And of course, you don't come for financial advice or investment advice. This is educational research information. That being said, we've been following this for years. We look forward to sharing with you the developments and our perspectives. As far as a macro outlook is concerned, we're not too surprised by what we see. We've been tracking the Fed, balance sheet, interest rates, and what's going on in the world. Of course, fortunately, blockchain and crypto, unlike the stock market, S&P, NASDAQ, the blockchain and crypto market is worldwide, global, and there are a lot more, access entry points. So I guess that's kind of the segue into what this article is about. Crypto's next bull run will come from the East. People who have been kind of tracking the macro US outlook, whether from us or other sources, the idea is, housing market, interest rates, what's the recessionary, depressionary, what's the outlook for the economy in the US? And I guess with that background and what we've been sharing for a while now, we'll continue to share the developments. What do you think is Winklevoss, who's one of the co-founders of Gemini, one of the largest or most prominent exchanges? If you're in the US and you'd like to have access to crypto, they've been probably one of the best, one of the better entry points and exit points into that market. And
yes,
what's his opinion, I guess?
Yeah, well, his call is that the next bull run in crypto is going to be fueled by investment coming from the East. And there's some really good macro reasons for this. The main thing is dealing with interest rates. So the U.S. and the Western world has printed a whole bunch of money up during the COVID crisis, and especially as the economy opened up, there was even more accommodation to kind of meet the new demand, pent up demand for loans, and to as companies come back online, start producing more, you're going to have expenses. You got to pay for labor, rent, buy machines, distribution. There's all kinds of costs involved. So the demand, so as production increases, demand for credit increases, and so the U.S. In the West has been hiking interest rates. We already had our opening up phase, and we stimulated the economy and pumped liquidity in and saw inflation kind of get out of control. So we've been raising rates and destroying money and reducing credit to kind of deal with that. Well, in China, and they just recently opened up. They had a much longer shutdown, much more brutal shutdown, and they realized that, hey, this is not going to work. We can't just weld people in their apartments and think that's going to solve the COVID problem. So they're embracing a more of an open approach, and for that, their economy is opening up and the demand for loans is growing. So they are now in that phase where they're printing money, extending credit, and reducing rates. And what that means is that if you're in that economy and you're seeing the value of your money and expected value of it to continue to go down, and if you can't earn a yield savings or buying T-bills or whatever because the interest rates are low, then you're kind of forced to either put your money in the stock market or into crypto or into real estate or something that's going to appreciate. So there's thinking is that now that China's opening up, you're going to see a lot of people making adjustments given their policy changes, and that's going to fuel a crypto boom, right? And the other side of it is that in the US you can get a pretty good return on a CD now or a bond. And so some of the money that would have flown, in the U.S. would have flown into the crypto markets might be, being diverted in these more traditional assets. So that's the thesis.
That's a great point. And actually, to that point, that they say that's actually a lot of the reason why you see blockchain and crypto developing faster or people embracing it more in the East or in other countries, because they traditionally didn't have easy access to better financial tools, those products at their disposal. So there's that. And that's another reason why it's so attractive, and we really enjoy sharing the developments that go on in blockchain, cryptocurrency, this new technology, because it is something that in the future has a little bit of a resilience that maybe more domestic financial products don't have, because this is a technology that allows for growth and access to anywhere in the world. If China, India, Japan, Korea, if large nations start saying we open up through regulation and through with liquidity, we open up to growth and investment in these sectors, well, you know, we're absolutely still early in all these industries. So, okay, I think
so this is the bullish sentiment, right? But I think, and a lot of this is driven by some changes that have happened specifically with Hong Kong, and that's going into the next article. The headline here is that no, Hong Kong will not be allowing retail traders access to crypto on June 1st, and so there's been a bit of a confusion surrounding the changes that China has made regarding Hong Kong and how people in Hong Kong can access crypto. And the thinking was it was going to open up crypto markets to anybody, any retail investor. But really what it's going to be doing is opening it up just to institutional investors. And so in this article gets into how they're going to have to research and spend time studying what kind of regulations they want to put in place for the retail side before they just open the doors to that. So the idea that China is going to fuel the next crypto bubble or boom or whatever, it could be accurate, but it's not going to be maybe this month or overnight. Next month or June. It won't be an overnight deal. Yeah, this is a work in progress.
However, we like to give the macro perspective and outlook. We've been in this space for many years. And one thing to take away is that if you really think about it, a few years ago, people were laughing, saying this technology was a joke, that it's not, that it's just, it's a beanie baby. And the reason why we go over these articles and we keep these updates is because it's really reaffirming and hammering the point home that this is a new technology that's being embraced and adopted worldwide. Maybe this country's adopting this technology, this corporation is building on with Polygon or on Ethereum or Solana or Algorand, but we're seeing that these technologies are being taken seriously. They are being adopted. And heck, if it starts out with institutional investors having access to these new technologies, and that's the entryway, it's still a lot better and a lot it's definitely a better outlook, progress for crypto and blockchain and the world mainstream markets that it's being absorbed into. So
now there's some timing going on here that I find interesting. So right as let's go to the next article, because it's perfectly related. So this next article talks about how China has just engaged in one of the largest cash injections ever in its economy, and they've added 632 billion won through the reverse repo facility, and that is to fuel that demand for credit and loans that we were talking about a minute ago as they open up, right? So you're seeing massive credit and money creation, which we know from our economic understanding, that's probably going to be inflationary and drive down the purchasing power of any money that people are holding in won. So you would think the natural incentive is to go and get out of that and get into anything else, right? Some kind of asset that is going to appreciate and not depreciate. So crypto would obviously be a huge choice for that. But in Hong Kong, they are saying, okay, if you're an institutional investor, you can participate now in the crypto markets, but not retail.
Right.
Think about that though. So you're letting the big players have this off ramp to escape what's coming, but the retail is nope. Capital controls, brick wall. You're going to pay the cost, right? You're going to be the one that's having to lose basically. If it's a PvP player versus player game, that's the losing side. that's walled into a losing investment. So just sort of just something that come in my mind. There's a little bit of a class war dimension to that.
And that's a theme that we'll get to later on, because there's another article, and many people aren't aware that FTX, and this is according, I think, to the Bank of International Settlements. I think it was their research,
Yeah.
but that I don't want to spoil the news, but spoiler alert, FTX did more damage to retail investors in developing countries than it did to any institutional investors, or B, even retail investors in more developed countries. So, okay, so China is doing reverse repos just like we did, or just like the US Fed did to help, quantitative easing and put liquidity back in the market. So we see that happening, but the work that the Fed's been doing with raising interest rates and selling off its balance sheet, doing the opposite, we're starting to see that take effect over here. And now when we were talking about before, when we were talking about the Winklevoss, talking about being left behind by the East, some of this stuff may be regulatory, and we hope that the regulations make it to where people have easy access and are able to partake in this new development. But a lot of it is also luck of the draw on when your nation happens to give access to liquidity and when the money is available, and where development is at crypto at those times, because a lot of the people over in the East didn't have that cheap access to liquidity when maybe during the DeFi craze or the early NFT craze. But now here we are with development in blockchain and crypto sometime later, and we're starting to see liquidity constraints in the West and some tightening up happening. And in the East, you're seeing access to, even if it's institutional investors, having access to digital assets, blockchain and crypto. And of course, a lot of these projects and decentralized applications have come a long way, and these layer 2 solutions are a lot further. So it's just interesting to see when people who have access to liquidity are kind of able to play in the game. Now, of course, there's pockets of people in the East and the West that are able to stay abreast of what's going on nonstop. And hopefully, if you subscribe and you like this channel and you want to stay abreast of the latest developments, you can stay on top of this too. But okay. So
this is a handy. I was just going to say, this is a handy little tool, finviz.com. You can click around, you'll find their economic calendar. It has all of the forthcoming data releases to expect in the coming week. And recently we got the some housing data, and 2 data points. Yes. The first data point was yesterday, on Wednesday, on Tuesday, not today's Wednesday. So Tuesday, yesterday, we got the
But when you watch this video,
sales.
We don't know what day of the week it's going to be.
Yeah. So on Tuesday, the 21st, let's just say that existing home sales came out. We had 4 million, and that's a down slightly from the month prior, and just shows kind of a downtrend. Really, that's the idea here. And then today, on the 22nd, we had the mortgage applications index, and we see that has contracted by 13% and 7% in the prior month. So clearly, mortgage sales, mortgage applications, home sales are showing that the housing is slowing down. Housing industry is slowing down, and that's kind of a leading indicator in a way, because it lags a slowdown in the real economy is going to lag the housing, right? So as people lose wealth in their homes, they restrict they start consuming less and demanding less, and so demand will be reduced as this deleveraging process occurs, and that'll eventually spill over into other sectors, whether it's stocks or consumer goods or whatever. So the housing slowdown is one of the main, it's probably the most important asset in terms of its correlation with the overall economy, the real economy. And as it goes, so does the real economy, right? So just kind of take this as a indicator that even though we're talking about the Fed pivoting and potentially having the return of a bull market and avoiding a recession, that there's still a lot to be said about whether or not that's going to happen. We don't really, it's up in the air, and that a recession driven by housing and interest rates is still very much possible.
And we're seeing just the beginning, the precursor to that possibility. I mean, actually, from a macro perspective, this is this is really what we've been waiting for. The Fed has been raising rates, and the job reports have been too strong for what they'd like to see as far as trying to get the economy to slow down and bring down inflation. So the idea is that really this is what the Fed is gearing towards. And like you said, this is going to have a ripple effect in many other parts of the economy, not just for people's home wealth and how that is going to affect consumption and prices. But when you look at development and new homes being built and the economy, the jobs that are surround that. So
yes,
this is definitely buckle up time and be prepared for the times ahead. But, you know, of course, the good news is this is the sooner we get to these points, in the economy is the sooner that the Fed can have the power to start saying, okay, we've seen enough of a slowdown and we've achieved what we wanted to achieve with inflation, and we're ready to start going the other direction.
yeah.
So, but yeah, I mean, it definitely looks like we are. Last week, we talked about the Fed's announcement on the balance sheet. They're talking about years on the balance sheet. So it would be nice if the interest rate slow down or the raising of the rates, if that was able to turn around at the end of 2023, 2024, that would be quick.
Yeah, that'd be great.
And great and good news. So,
and before we shift gears, I think that's possible. When you consider what's going on globally with, like, say, Japan and China maintaining their liquidity,
right,
maintaining their easy loose money policies, that could do is it could have an exchange rate effect on the dollar, where the dollar strengthens as they weaken, and then you could get this this dual strengthening, right? So one side's driven by policy at the Fed, the other side's being driven by weaker foreign currencies. And you could even see the dollar strengthen too much too soon because of that effect of what's going on globally, and that could force the Fed to pivot quicker. That could happen. We could see that. Just something to think about.
Absolutely. Something else to think about is that these effects aren't just felt in the housing market. That's why we like to cover the macro outlook, as blockchain and crypto is an emerging technology and market that is connected to the market world economy at large. And when times are tough. And, you see this happening in mainstream Walmart and other large companies, Amazon announcing layoffs. That's what you have to do to stay healthy and to stay competitive and to be successful for the future. So this is definitely not bad news in any way, shape, or form for Polygon, the layer 2 solution for Ethereum. In fact, when you peel behind the article, it's really just something that they're doing to manage the foundation properly for the long term. They actually have a large, healthy treasury to sustain them for quite some time. So it's not any type of emergency measure. It's just good business practices at this point with what's happening. So
it just, like you said earlier, lots of companies are trying to go leaner and cut some labor out. Tech is the big story there. All the tech companies, and I think you can include crypto as a tech industry, right?
Absolutely. And I don't know that this is a big news, but I did hear some regulation or some regulators sounding the alarm that Polygon lays off 20%, or look at how crypto is failing, or all these problems, and that it's just silly. It's just absurd when you look at that's just how companies in the market in the economy generally they all have to downsize and figure out what to do, sell off capital, lay off workforce, whatever it is, in order to stay competitive. So I think it's just
it's not a crypto problem.
No, it's not even really a problem. It's just
not a problem.
It's just what you do when
it's just how markets work.
Yeah. So, but something about crypto and how markets work. One of the big thing on markets, of course, is money, and stable coins are money connected to the mainstream market in the crypto market. And they've been in the news, whether it's Terra Luna's UST that we talked about a long time ago.
Yep.
In fact, mentioned before it collapsed. But there are not all stable coins are the same, and there are other stable coins that were born before Terra Luna UST, and they are still thriving and surviving. Some are centralized, some are decentralized. There are many different kinds of digital assets pegged to a dollar or a currency, a fiat currency of some kind. And that's really what this article is about. It's stating that in the future, as more regulation takes place on an international, or I guess in this case, especially international global standards, but gets enforced and implemented in nations, that a lot of the access to stable coins that exist in the market right now, they may go away in a year or two from now, whether it's MIM or DAI or Frax, or go list the whatever stable coin is out there. If it's not the USDC Circle approved, or maybe a different type of,
and it's not even clear if that would meet the standards they're talking about here.
You're right.
Yeah, so this is the FSB, Financial Stability Board. This is a entity that was created after or at the end of a G20 meeting, and it doesn't have any legal lawmaking ability, but it is taken serious as a recommendation, international body that issues recommendations, and has a lot of influence on national governments because of its G20 connections. So the takeaway here is that when their recommendations are made later on, I think later this month, if those become law, then the thinking is that most stable coins, or if not all, would not be legal. And so the question is, what kind of regulations are they going to recommend, and what could they do to meet them potentially? And I think one of the things people are talking about is not having the backing, the stablecoin collateral backing, be made of private debt, but more, and private debt would be like a bond of a company, right? Private bond, short-term bonds, things like that. They're looking more for public debt. So that according to the article, there has been an effort on the part of stablecoins to get out of private debt, to make their reserves more transparent in terms of public debt. And so that's one thing to think about. But beyond that, these stable coins would also have to apply and be approved essentially as a security, and these companies that issue these would have to be security issuers essentially. So that's really, so it's not so much that the standards are unclear as it is that, hey, you would have to get licensed. And who's to say that any of these licenses would be given out, right? So the thinking is that this kind of opens the door to CBDC as the only stable coin that's going to have a future.
Some of it, hopefully, some of it just seems blown out of proportion. The idea of requiring certain kinds of redemption rights. I mean, the reality is that fiat currency itself is not redeemable anymore in any type of silver or gold or commodity. The idea that something has to be backed one for one by anything in the world of blockchain and crypto that's born from a financial system that does not have that type of collateral backing, it just seems disingenuous. I mean, how do you expect that to work? The reality is that many of the stable coins that exist in blockchain and crypto are in some ways more redeemable or more backed than many fiat currencies, in that they have collateral reserves of Bitcoin or Ethereum or digital assets that are used in order to keep the peg as well, or even having cash, dollar denominated assets that are actually held in reserve too. So, when governments print trillions of dollars and issue new currency, there isn't this same type of requirement, in order to.
Well, their collateral in those moments would just be a bond, right? So it's, I hear you. It's interesting how that
and the idea to determine how DeFi should be regulated, it would be nice, and this is where you'll see US or China or different countries, but which countries promote research and development with regulation and which countries kind of stifle it. Because you look at DeFi and in a lot of these areas of AMMs or bridges and interoperability and some of these amazing tools the market is allowing to be built on these different networks. And so allowing a space for these for this growth to take place, this to mature in blockchain, I think is something that could, just like you have Kusama for Polkadot, you have these test networks.
Yeah.
In many ways, allowing DeFi, Ethereum, Polygon, layer twos to grow and exchange in the Web3 world, that is a great testing ground for products or things that could be used on,
later on.
National. So
in a more regulated way.
We'll stay up to date on what regulations the IMF, International Monetary Fund. I mean, I don't want it to be like the fox in charge of the hen house here, but when you're talking about the most centralized, most powerful monetary institutions in the world, deciding on how a new technology should be used when many parts of that new technology directly compete or make obsolete some of the intermediaries and functions of the traditional system. I mean, if you look at International Monetary Fund, Bank of International Settlements, private Federal Reserve banks in different countries, and these methods of transferring wealth, transferring value, creating money, it would definitely be streamlined. When you use blockchain technology, you wouldn't need as many accountants in the building late at night, keeping electricity on to make sure that the books are balanced. A lot of these processes are to be automated, no matter how the technology is adopted. So I can understand wanting to regulate if I was working in those industries too. But okay, in the world of CBDC, which we were just talking about, and regulation, not everyone is for rolling out regulation immediately. And this is a politician who says, slow down here in the US.
You could see it in the other. I would actually, I would frame it. I make the same point, but I would say it's actually he's trying to he wants to have Congress regulate what the Fed is doing as it regards the CBDC, central bank digital currency, which they're talking about and studying and hiring people to work on. And the thing he's looking at is he wants to ensure that anything that they do come up with, it does not endanger financial privacy, which is probably the biggest concern is, do these CBDCs become a tool where people's wallets can be shut off, or all your purchases can be tracked, or is it going to have this monetary, like cash money kind of anonymity built into it, where small payments are just like when you buy a coffee, that's anonymous. Will that be gone with the CBDC, or will this new thing have all these Orwellian controls where wallets shut down, purchases tracked, yada yada yada? And because as it stands now, we do have privacy at the point of sale, at the fundamental layer of the money unit. If you're using cash, right, you can take cash and privately spend it without disclosing who or what or anything. So that not having, losing that layer of privacy with a digital currency is something to be concerned about. And what does that mean for civil rights? What does that mean for civil liberty and for the equality before the law? What kind of power? Power corrupts, and what happens to government when this power is acquired? So it's a scary thing to consider, especially as our politics is starting to become very adversarial, right? So one party sees the other as the enemy, that it reduces the moral kind of like second guessing when you have this power, and now you have the enemy in your crosshairs. You can shut their wallets off. Well, who's to say that a Democrat doesn't shut off a MAGA Trump, person's wallet, or vice versa? So just
and
the ability to do that is not something
it's not a theory. I mean, that people in many countries live with that reality already. They say, oh, okay, well, if this party is going to come into office, then anyone in my family or anyone who historically did not support that party is now going to be targeted and possibly lose their jobs or lose their land. And so this does make that easier. I mean, of course, we'll continue to talk about the role of privacy in blockchain and crypto. That's been something that we've maintained from the beginning. The reality is that Ethereum, Bitcoin, most all of these blockchains and cryptos that people are familiar with, they all operate on public ledgers that are as far from being anonymous and private as you could ever imagine. So I think a lot of this is not just a CBDC to respect privacy, but to understand the importance of allowing blockchain and crypto to exist outside the traditional AML KYC standards that were necessary. Because look, the reality is that whether it's Bitcoin or some other CBDC or something that's used, it's impossible to counterfeit. So it's not like we need those institutions or those protections that have existed forever to prevent fake gold or fake treasury notes being printed in South America and passed over as banknotes.
If only that were their main concern, then we could say, oh, well, don't worry about it. But that, I don't believe, it's more than that, right?
I'm not sure what it all is. I'm just stating that there's a lot of case for this new technology making obsolete some of those.
Oh, right.
Those protections. So
for sure,
when it comes to privacy, AML KYC, that can easily still be accomplished at other areas of the economy where that information is needed. But it's kind of like how it is to today. I mean, if someone goes and exchanges cash, which I think is the purpose of this bill, from your neighbor, whether you're getting lemonade from a lemonade stand or doing between neighbors, doing some work for each other. I mean, there's so many times where people can exchange value and it not be
anonymously.
Not be recorded on a public ledger, because that's the idea. Is it's not just that there's not someone on the other end of a transaction. When you move to blockchain and crypto, you're moving to where every single action that's ever been done is on a public ledger from the beginning of time to any transaction you ever make or will make on a ledger, whether you go from this chain to that chain or that chain to this chain. That's what chain analysis is. So,
and it's funny that you say that, because the people who created this technology saw it as a way to free us from an Orwellian monetary system, which
allegedly
in some ways does. Allegedly. But in another way, you're like, wait a minute, we just invented the most Orwellian system.
Yeah, absolutely. But blockchain, Bitcoin, crypto, if not understood or used properly, is absolutely the most Orwellian monetary tool you could ever dream of, because you can shut people's wallets down, especially if we start talking about a CBDC where a central authority can go into wallets, and you can't do that with Bitcoin. That's the good news about Bitcoin, is that no one can go into your Bitcoin wallet and decide I'm going to slash 50% of these wallets or add money to these wallets. So that's something to be aware of. Just like not all stable coins are the same, not all blockchains and cryptos are equally decentralized or secure. In the world of regulation, so we'll be kind of quick on this, but this is, well, just saying, another crypto exchange CEO criticizing regulators over their regulatory measures. And the main point of this article is,
well, there was a whistleblow that I think is the one take. So you have like two parts here. You got the Kraken CEO and talking about how he's not gonna, he doesn't want to, he's paying the fine, and essentially they're gonna not shut down. They're shutting down their staking, but they're not gonna try to do any regulatory. They don't want to register as a security with this SEC, right? And but that's one thing. But the next part that was interesting was that the CEO of Custodia had was complaining and made a whistleblow to the SEC, exposing some fraud in a unnamed large crypto company. I think we can guess who that is. And her criticism is that they're focusing on Binance and Kraken and you know, these kind of big but not fraudulent crypto banks or crypto companies, while ignoring the outright scams. And I think we don't get, she doesn't name it, but I believe FTX is probably who's being talked about as the scam.
It's not criticizing regulation per se. The point is that where the regulation is focused and who the regulators are going after. And the idea is, like you says, that Binance, Kraken, Coinbase, Gemini, these are more of the transparent, they're the most solid organizations out there. So when the SEC is going after them to fine them 30 million for not filing this paperwork or trying to squeeze out this money, this fine, they're saying you're ignoring the FTXs that are out there that are fraudulent, that are scamming people. So,
and then if that kind of goes to their motivation, you know, if there is some kind of cynicism, if we can read this in a cynical way, it almost makes sense that they would ignore the outright scams, because if they are hostile to the space, then letting that blow up and become like a contagion, you know, serves their goal, because they can say, hey, look at how awful this is, we got to regulate.
Well, you bring up a good point. I've actually thought about this for years now, looking at crypto. You have some of the most brilliant minds in finance and in law and in regulation that exist in these institutions all around the world. It's kind of absurd and silly to me that you would see BitConnects and other outright scams and frauds grow with such strength, being left alone purposely, almost to become these too big to succeed bubbles that are destined to pop. And when they pop, it's to say, oh my gosh, look at all of the damage that's being done by this industry. You need regulation over here. And meanwhile, you look over at Aave, and you look over at Curve, and you look over at Uniswap. You go look at blockchain development over several years, and while there are failures in some projects that don't work out and they get seen bugs in the code, the reality is that a lot of the industry, the technology is working very well and continues to work well. So even FTX, we've already done a video on that, but there's a lot of ignorance, there's a lot of misconceptions surrounding FTX, and that FTX failure was not a crypto failure. It was a corporation that had access to banking.
Well, it was a story about leverage, and what happens when you over leverage yourself, and then the markets turn and interest rates go up, liquidity dries up, and asset values fall, and your positions now become losers. And it's an old story.
But it's a feature of the mainstream market. This happens to companies and can happen to a company all the time. When a corporation fails, there's no one running around to scream unless there was fraud or outright, something. But even you have Enrons, you have Bernie Madoffs, you have these examples of whether it's fraud, or you have other industries that just can't survive when the downturn happens. And that failure of a company is not connected to crypto being risky or crypto being a problem. And that's the idea that FTX is in the same breath of needing crypto regulation is kind of silly, because it wasn't really a crypto failure or a crypto debacle in any way. It was purely just a company
because I mean, if they had just bought Bitcoin and ETH and left it on a wallet, and then the prices fall, well, okay, just don't sell it at that time, right? You're good. Just wait, be patient, and just hold on for the next wave. But no, they had leveraged up all, they had, taken collateral from depositors and made a bunch of bets and had a bunch of assets that they couldn't, that weren't going to be worth what they had on the books at all. And yeah, it was a pretty simple story. But anybody holding Bitcoin, and if you had pulled your Bitcoin out of FTX, a week before this happened, you're good. It's not like
Right.
Bitcoin had a it's not like Bitcoin failed or the blockchain had a problem, or no, it's these third parties that levered themselves, just happened to do it in crypto market, right?
And the
But
irony
that
is
same
that
story plays out everywhere.
you look at FTX, its growth was hand in hand surrounded by politicians or people in the financial industry. So FTX
Yeah.
was able to get as large as it did with the support and the blessing of many people working in that industry around it. So when this blows up, and then to rush and say, whoa, we need regulation. It's like, well, where were you all?
What's
Where
going to
were
stop
you
that
all?
happening under regulation? You can still bribe
Right.
the same, if you have millions of dollars to donate to these political campaigns, even under a regulatory environment, you can get
Yeah.
those regulators can become captured. Yeah, I mean, it's really not a there's really
So
no way out of that.
this is just continue with the regulatory story with blockchain and crypto, and we're hoping and looking for that rational regulation to take place that allows for blockchain and crypto to grow and develop in a harmonious and safe way, with research and development taking place. But we'll also, it's great to be able to stop scammers and hackers and fraudulent, whatever, all the stuff, all the nefarious and horrible things that people are out there using blockchain for, that needs to be stopped. And, you know,
Yeah, for sure.
but it's such a small,
It's not an either or thing. It's it's there's a third way. We can have regulations that aren't overly restrictive, but also punish people who engage in fraud.
we mentioned this already. This will be a quick, as far as who got hit hardest by it. I mean, it's a good segue talking about FTX and regulation, but ironically, a lot of institutions that invested in FTX, a lot of major players, those people tend to come away with profits and aren't usually the ones that get hit by these debacles and collapses. And this is an article, research came out from the Bank of International Settlements, BIS, stating basically that the FTX collapse, who did it hit the most?
It impacted retail investors, outsized amount, and inside that category, retail investors in emerging economies, undeveloped economies, more than retail in developed.
So that's
yeah,
like
that's
the people that are the most what's the word I'm
vulnerable.
looking for? Vulnerable. That's it. The people that are
Yeah.
most vulnerable are the ones that got hit the hardest. I mean, and the irony is that blockchain and crypto has the potential to in a decentralized way to bring access to the most vulnerable, or to those who normally don't have, access to these financial products, and to liquidity, and to money, and to credit. And it's a shame, because it's not that the technology itself still isn't decentralized and secure and working, and have that ability to help the most vulnerable, or those who in the past haven't had equal opportunity or access. It's just that, again, it's like a BitConnect. It's like we're seeing these corporate creations that are sucking energy and money away from real blockchain and real development. Like, this isn't a blockchain, a crypto lack of regulation scam. This was a company that opened up in the United States, and it had this service that it offered people internationally, and people got hosed, and it was the retail investors that got hosed.
Now, one thing that this article mentions that I think is really interesting is that, according to the BIS study, scrolling down, the very last part, there you go, is that well, of course, larger investors benefited at the expense of the smaller ones, but the one of the big things that stands out is that they did not find a strong impact, or they said that crypto shocks have a very limited impact on equity prices or on broader financial conditions, which is directly contradicting what the IMF just talked about with contagion, right? Needing to regulate these things to minimize the contagion. And it's in contradiction to what we've heard over the last year or two about why crypto needs to be regulated. And so if it's not going to be its spillover effects in the market, then it's going to have to be something else. And so the new narrative is going to be safeguarding retail investors. And so so we're seeing a kind of a shift in the rationale as to why this industry needs to be more regulated. And I guess, and honestly, from an outside looking in, it does seem to be a stronger rationale. There are examples of say FTX abuse, taking a depositor money and doing something with it that they shouldn't, when they didn't have when that wasn't their money to use. And of course, there we can think of other examples as well. So yeah, the question is what kind of safeguards would be helpful? And then how do we make sure we don't go too far and kill the golden goose? And because we want to see experimentation and dynamism and innovation. So yeah, but at the same time, protecting people from huskers and grifters saying, hey, buy this token at the top, right, and pump my bags. Sure. and using retail as exit liquidity, it's especially when there's an institutional player doing this, or saying, hey, buy these, pushing the product on an investor, while on the other side they're selling short that same asset. Like there are things that could be improved upon, I guess is what I'm saying.
Totally. And we've mentioned this is a long story we've talked about for a while, but the idea that the crypto market, the Bitcoin market itself, is a threat to the financial market or the global market or the world market is ridiculous. It's silly, and it has proven to actually not be true. That's why they said we're looking for a new reason to set up regulation, and that's no longer to prevent some collapse of the whole financial system based on crypto, but now it's to protect retail investors. And it makes sense, because if you look at what's the whole crypto market, is a couple trillion, is it under 3 trillion?
Yeah,
do we know?
I think it's below 2 trillion, if I'm not mistaken.
Is it below 2 trillion? And so you look at let's see, the whole of crypto market cap is, it's under 2 trillion. 1.1. It's just $1.1 trillion of all of the crypto. And there's a lot of padding in that number, because there's a lot of tokens and projects that, due to blockchain algorithms, are valued at X amount, when you really cut through it, it's dead code. Nothing's really going
like
on.
FTT token would fit that.
So really, when you get down, we're probably under $1 trillion. We're probably under $1 trillion in actual cryptocurrency. And you look at just Larry Fink of BlackRock alone is in charge of 9 trillion. And there's other big players out there. So the idea that cryptocurrency or blockchain is causing a collapse or causing a downturn or causing a recession or depression or hurting these markets, not only is it ridiculous, it couldn't be further from the truth. And what's ironic is that this new emerging market actually has created a lot of jobs and a lot of opportunity and liquidity and strength to the economy, which is why we got a really cool article about people aware of this, and some people around the world that are embracing this and allowing it to help strengthen their local economies. But I don't want to spoil it yet. So we're getting close to it. But here's some more macro outlook good news. If you're not looking for trading advice, because that's not what we do here, but if you're looking for maybe what is the long-term outlook, the macro outlook on blockchain, well, here's a good article for you. You're looking at collaborations being made every day, every week, whether it's with Algorand, Ethereum, Polygon. Here we go. Tezos, a blockchain, partners with Google Cloud. Galaxy and PayPal invest in Chaos Labs. BitPay and Zen Ledger join hands for, I think that's a crypto taxing oversight protocol tool. And then of course, Sandbox, the metaverse, NFT, Ethereum based protocols collaborating with Ubisoft. And so we're just more collaborations. There's the investment news, all articles. We will leave links below to do your own research, which you should always do.
It's good to see which teams are building and delivering products even during, sideways bear markets, and shows you kind of what's potentially going to do good when the bull comes, right?
And that's basically, that's my outlook. I think that's our outlook here, is if you're looking to be a part of the future, help build the railroad ties, if you're help lay the pipes for the oil that's going to be bringing electricity and heating people's homes, build the roads that are going to allow people to drive and truck goods from one side of the country, or build ships to take them around the world. Blockchain and crypto depends upon these decentralized ledgers, whether it's proof of stake stakers on their wallets and computers, or miners, proof of work miners, and people using their computers to help secure a blockchain that way. It is built upon people joining these networks and making them larger and more resilient over time. Bitcoin today is a lot larger of a network and a lot more resilient than Bitcoin was 10 years ago. And so if you're seeing that we're at the beginning of a new blockchain technology emerging, what are going to be the PayPals, the Googles, the Amazons of the future, or at least who are they building with and who are they collaborating with? Because with that long-term outlook, instead of a get-rich-quick scheme, which that is not ever going to be on this channel, but if you're looking for finding potential long-term value projects to participate and to be a part of and to enjoy the opportunities that come with that, there are definitely some amazing opportunities in the long run for blockchain. And this is just a good article to kind of point in that direction, to get looking at different projects.
This is a fun article. El Salvador,
this is cool.
They've been doing a lot with Bitcoin over the last year.
Many years,
adopting
actually,
it as a legal, a couple years. Yeah, they have a legal tender, first to make legal tender, right, out of Bitcoin, and to kind of develop a national wallet where you can easily exchange your Bitcoin for another currency, and to
very open,
solve that. Yes, very open and transparent.
Very open to people traveling, and they also opened up their economy, their markets, to buying, like you said, making it their legal tender or their national currency has allowed for growth and attracting tourism or a lot of foreign investment, because Bitcoin is obviously a digital asset or a security or a commodity or whatever you decide to call it, or your country decides to call it, whatever it is, it's decentralized and it's around the world. And there are people that have this everywhere. So if you're saying, hey, we'll accept it for renting hotels or for going on nice trips and going to the beach here, and tell you what, there are a lot of people that are going to want to take advantage of that opportunity. But so El Salvador has paved the way, and who are they teaming up with? What's going on? What's an embassy in the United States?
Yeah, they're teaming up with the Texas government to create a Bitcoin embassy, and in order to kind of spread the to help fund and develop and organize Bitcoin adoption in Texas, and to potentially, I guess, to collaborate on maybe some legislation. I know Texas has been positioning itself as sort of a hub for crypto, specifically Bitcoin mining. And there's even talk in this article, and it's nothing concrete, but there's a little mention that there could be some legislation passed which would make crypto purchases in Texas tax-free. I guess you would be saving that sales tax, that 8%. So that could be very cool. It'd be another example of incentivizing people to start bringing in foreign investment, even outside, whether outside the United States or globally, but at least even inside the United States, to bring your crypto to Texas, and you get to have an 8% premium in whatever you purchase, that, or a discount rather, that's significant.
Well, hey, if you're a Texas lawmaker and you're looking to pass crypto-friendly laws and you'd like some information or some knowledge about what's going on in the blockchain crypto markets, feel free to reach out to us and we'll be happy to help you in any way that we can. We are pro crypto-friendly laws and regulations, and we happen to be in Texas, and this hits close to home. So this article is great. I love seeing Texas pioneer and pave the way. Like you said, they've actually also, when it comes to alternative energy, have been one of the leaders in that when it comes to production in the nation.
Yeah.
And we know that Bitcoin and blockchain crypto, many are actually resorting to alternative energy sources as their, I think the study came out saying Bitcoin is over 50% mined by green energy, or is not so. But
well, now that a lot of mining has moved to Texas, and Texas has a big wind farm industry, I could see how that could happen. Yeah.
Was it El Salvador that was using a volcano, or was it Guatemala?
Yes.
I mean, this
yeah,
many ways to mine Bitcoin. But so this is really neat. And again, it's ways that blockchain and crypto can help stimulate local economies in times of recessions or downturns. There are pockets of trapped wealth in the digital asset blockchain world, and it's really neat to see El Salvador take this model and help spread it to other parts of the world. That's just really beautiful. I think it's really great what El Salvador is doing, and that they're doing this in Texas. It'd be great to see how this kind of ripples out in other areas that become crypto-friendly embassies. And it's great because this is where learning, education will take place. You know, the local vendors, the merchants, the people that live around there. How is this working out, or what's going on here? Then all of a sudden they get a Web 3.0 wallet and start mining or start staking or start getting involved. So this is how the learning kind of spreads and the adoption spreads, and it gets going. So
it's good to see it.
Good to see it there. What do we have here? Okay, and this is just a quick article. Cardano, Hex, and Sand. Hex and Sand are cryptocurrencies that are built on the Ethereum network, smart contracts, and Cardano is its own layer one. You know, the idea is that we actually have a website we'll link to. You can, because it's an blockchain technology is on a ledger that is public, there are all sorts of tools that are tracking, flows into Ethereum or Bitcoin in and out. They're tracking wallets and wallet sizes. And here's Whale Watcher is dedicated to checking out the largest whales, the largest wallets on these different blockchains. So something that's interesting to note is that when you see whale activity moving to different chains, it can often signify the beginning of growth in that blockchain. So I think, that's maybe a lot of what this article is saying. You often see whales move into something before a lot of the development and the retail comes in. You usually don't see the whales come in after.
Coming late. It's the smart money, right?
That's why there are these metrics that are watching this. It's not to say that any one of these cryptos to jump in now. This is not financial advice or trading advice. In fact, usually by the time I read this article or see it, I'm definitely at the end of it. That being said, we'll continue to talk about the top picks of blockchains and cryptos for 2023 and beyond. Cardano is on that list. I actually have Hex on that list too. I'm going to add that and explain why, as far as diversification into different blockchain protocols or applications. And Sandbox would be a great metaverse NFT play to earn, one of the stronger plays there as well. So interesting things. I look for diversification and not being lumped into 50 of the same similar types of blockchains. And what's neat about this, one of the reasons I pull this article up is because
They're all different.
they're all different. You know, Cardano is a layer
Yeah.
one. Hex is a unique protocol that probably has the greatest chance, one of the in that category, to survive securities type regulations. It's not the only one. There are other applications that are built on Ethereum, but when you really get into blockchain and crypto, you'd be surprised at how many ERC20 tokens they're not set it and forget it according to code contracts. They actually are run by foundations that can make a lot of changes to the protocol and to the code. So when you come across something that actually has no intermediaries or foundations or third parties that have that type of control, not going to talk about the OA, stupid, but
Yes, that's a different.
even
That's too deep.
even
yes.
then the OA is part of it's too deep. It's part of the code, but that's a unique feature there that you could see in a post regulation world where the cryptos that don't have that don't
Foundation. Yeah, that's
that don't
huge.
fail or meet the Howey test standard. And then you've got the sandbox for NFTs, metaverse, play to earn gaming, and a whole digital economy you can see.
And we just
built.
talked about their new partnership with Ubisoft, the game developer. One of the,
Did we?
made some of my favorite games over the years. Yep.
So there you
So
go.
that's worth mentioning.
We covered a lot. This is I'll leave all these links below. And of course, if you like this information and you would like to learn about what's going on in the economy, the macro outlook, and how it applies to blockchain and the opportunities, you like this channel, hit the subscribe button, notification, hit the like button. That helps this knowledge get out. And of course, we will leave links below. You can support the channel below. And of course, if you like one-on-one help, then you're saying, God, I would like to learn more about proof of work, proof of stake, layer ones, layer twos, what airdrops, IBC, interoperability. How does this stuff work? A Web 3.0 wallet, storage, security. That's right. We can help you out. Just fill out this information, your name, your email, what you'd like to learn about, and drop us a little message, and we'll be happy to get back to you and set up a time for some one-on-one consulting or some group tutorial sessions if you are with a firm or institution that is looking to catch your people up to speed. That's what we do, catch you up to speed. And I think that we've caught you up to speed on what's going on in the world today, right now, as much as we can. Until next time.
Yeah. Thank you.
Have a beautiful day. Namaste. Until the next time. Thank you.